Hey guys, welcome back to the Results Junkies podcast. Paul and I are strapped into our desks today. We're looking at what Facebook is saying about Apple's changes over in the EU, which we talked about last week on the show, and some numbers from Spotify and Joe Rogan. I've always been interested in podcast economics, mostly because I haven't quite figured out how to make the hundreds of millions off of a podcast like Joe Rogan has just yet. But it's such an
I don't think
interesting
anybody has.
Yeah, well, he has, yeah.
Yeah.
He might be the only one, but podcast economics have always interested me because it's such a very different form of conversion, which you and I have figured out here, Paul, over the last 100 episodes or so.
I mean, when I see some of the amount of money some of these people are making, I question my own career choices sometimes. Oh man, how you been?
Good, I've been good, and I'll be honest, I know we'll talk about it more in detail in a second. I was surprised by the headline Joe Rogan numbers, which we'll talk about in a bit. So, but yeah, things have been good. I still I don't think we'll talk about it this week, but I still want to talk more. I've been maybe we talk about it next week because I think we got one more episode before we get to South Dakota because this won't go live this week.
Yes.
Yeah.
Yes. Yep.
So there's this question in my head. It's like, and this isn't about South Dakota specifically, but you and I talked about that neither one of us has written a check into a new venture in months, and so it's like I got this question, and let's talk about it next week. But what is it like? What is it we're waiting for? Like, what are we looking for? What's that company? And I couldn't answer it myself. I want some more time to think about it. But I'm curious what it would take for me to write a check today.
Well, my gut reaction, and again, just speaking for me here, I suppose, is I think it's the fear of. See, I don't know how to say this without sounding horrible, but for me, it's been like I may not be writing checks into new companies, at least over the last couple months, but it's not to say that I'm not actually moving money around into different investment assets.
Sure.
And so it's really about the asset class as opposed to like I guess what I'm just trying to say in a poorly articulated way is that it's not that the quality of deal flow or anything like that's gone down. It's that the yield in other asset classes is much more stable. And stable is not the right word, but much more good.
Well, yeah. Let's put a pin in that. And we'll talk more about it later. Because I have thoughts on it,
It
lots of them.
it turns out that, making money as an investor is kind of fun as long as you're making money.
Yeah. No, I
That's
like money.
that's
I
the
like.
asterisk you gotta put, as long
Yeah.
as you're making money.
Yeah. Yeah. So if you're just tuning in, resultsjunkies.com is how you get a hold of us. He is at Paul Singh on all those social media channels. I am at Pizza in Motion. And we are approximately, with Joe Rogan's new $250 million deal, I have checked the records. We are $250 million behind him in sponsorship deals for the podcast.
Correct.
Yep.
Yes. Yes, just a
Approximately.
rounding error behind him.
Approximately. So just to put this in perspective, a couple of things. I think there are a couple of things that are interesting here, and one of them goes to one of your favorite topics, distribution. So when Joe Rogan signed his last deal, which was about 4 years ago, he signed a $100 million deal with Spotify. And at the time, they took the show, for lack of a better term, they took the show private, meaning you had to listen on Spotify. It was still free to listen. You didn't have to be a paid member of Spotify, but they weren't distributing the show on Apple Podcasts or Google Podcasts or any of the other, popular platforms that are out there. And I think you and I are good examples of an older demographic that both use Apple Podcasts to listen to our podcasts. And so there's obviously a big chunk of the audience that doesn't listen to Spotify. I mean, I have a paid Spotify subscription, but I don't listen to podcasts there, and I don't think you do either.
Mm-mm, I don't. Dana uses Spotify for music, and if she's listening to podcasts, I think if she sends me a link, it's usually a Spotify link.
Mhm.
But I got nothing against Spotify. I just like
Yeah.
the native aspect of Apple Podcasts.
Yeah, I agree, and I think so a couple things. One, I do use Spotify to send people links because it's platform agnostic, so when I want to send somebody the podcast, I do send it to them in Spotify. I like the ability to download the episodes or have them downloaded on a regular basis, which is why I prefer the Apple and the Google model. But what's interesting here is that with Joe Rogan, which I mean, not even arguably, it's gotta be the highest grossing podcast in the world. And they Spotify, there's been a lot of stuff in the news. I mean, not mainstream news, if you will, because podcasting is not necessarily mainstream from a revenue standpoint. But there's been a lot of news and bits and pieces that Spotify got this big bet on podcasts wrong, and that the walled garden that they had built was not the right approach. And I think we're seeing that in that Joe Rogan's the second really big podcast on Spotify, along with another show called Call Her Daddy, which you noted was a Barstool acquisition and a very popular podcast about female sexuality. These two shows, very different shows, were both walled garden shows on Spotify. And Call Her Daddy is already back out in the wild. I saw that come up in the Pod News newsletter that I read on a daily basis. And now this deal with Joe Rogan says, and I'm reading from part of the press release here. It says Spotify will sell ads for and distribute the Joe Rogan Experience across several podcast platforms, including in a video format on YouTube, the company said Friday. Under his previous deal, the show was exclusive to Spotify.
This is interesting to me in the context of, from the perspective of, I think we've all known Spotify as that music app. Like
Mhm.
that's kind of what their brand is known for.
Sure.
And this is probably one of the biggest splashes and maybe even one of the first splashes they've made where they're kind of not being shy about becoming a media company. Like they're not limiting it just to Spotify. They're saying we own Joe Rogan's voice now and we own it. You're going to hear it everywhere, including Spotify. And that's kind of what a media company does, right?
It is, but I think the interesting thing here is I think what they tried to do was they tried to be a one-stop shop platform. So come to us for all of your media consumption, maybe similar to like a YouTube TV. And now they're pivoting out of that model saying we're almost like a production house. I mean, clearly they have lots of things they don't own that they just stream from the music standpoint. But they're saying that on shows that are either wholly owned or partially owned by them, that they're turning it more into a production house versus like the Netflix approach of, hey, we made this new movie with people that superstars, but we're only distributing it on our platform. Like Netflix doesn't, as far as I know, doesn't distribute those Netflix originals anywhere else.
But here's the thing, like, is it possible, and I'm going to say this assertively, but it's genuinely a question. We're talking about Spotify, we're talking about Netflix, isn't it possible that both of these companies, as we know them today, will continue to evolve just like regular TV over the last couple of years? Like, in other words, I remember a time when I was growing up where Star Trek: The Next Generation was only available on whatever channel 20 was when I was a little kid. And then eventually it went into syndication and you could see it on like 5 different channels at different times, and
Mm,
and so it went into syndication. Like it wasn't just, oh, it's on Paramount or whatever. And
right.
so, like, isn't it possible, like today we know Netflix as, if you want to see a Netflix backed movie, it's on Netflix. But isn't it possible at some point that, they're gonna keep their produced movies initially on their platform and then eventually syndicate them elsewhere as a possible way to get more exposure for Netflix and bring people back? Kinda like what Spotify's doing now, like, look, at the top of this episode, you and I just cavalierly talked about the fact that switching podcast apps is not something we're interested in. That's basically what you and I said
Yeah. No, I've
at the
tried other
beginning.
platforms and I came back to the dinosaur that I am. It's Apple.
Yeah, change is hard, like this is what a lot of founders don't get. They say they want to change the world. People don't want to change. We
Right.
we like what we like. And so I
We don't
think
want to
that
change until we do.
until we do, right? You
Right.
can't
Right.
make me change, but
Right.
I have to choose. And so, you know, Spotify, I think it's kind of a big cultural shift for them probably to make this change from, hey, we paid Joe Rogan $100 million to keep him on Spotify's app. And then I bet there was a hard set of conversations originally of like, hey, did we actually get $100 million worth of, new
Right.
accounts and stuff? And
That's
then
a lot
now
of
all of a
subscriptions
sudden,
at whatever, $15 a month.
right. And then now it's like on the flip side, it's like, well, let's double down on the media side. Turns out Joe Rogan's voice is valuable, but maybe it's not Spotify paid subscriptions anymore. We're just going to sell the ads wherever that thing gets syndicated out to. So I'm not articulating that very well, but it's interesting, right? It's like it's sort of this evolution of, Spotify. Can you imagine can you imagine like 15 years ago? I don't even know how old Spotify is, but I remember thinking of Spotify as a music app. And I remember like stuff, when TechCrunch or whoever used to write about them, there, people would talk about like what they pay the musicians. Like that was what they were known for.
Right.
Um, and now all of a sudden they're throwing around big numbers like this, which actually, now that I think about it, I don't mean to throw a curveball at you. I wonder if there are equal or larger deals like this already in play, but just not disclosed publicly because maybe the companies are privately held. Like, for example, SeatGeek. I mean, you know SeatGeek.
Yeah.
SeatGeek filed for their IPO in April of last year, 2023. So speculation is that they may go public sometime this year.
Right.
And I'm no rocket scientist, but I hear them advertise. They seem like they're the exclusive advertiser on Travis and Jason Kelsey's podcast.
Hmm.
I can't imagine that's cheap, especially now with the whole Taylor Swift kind of connection as well. So is it $250 million? Probably not, but it's more than a couple million, I bet. So anyway, I think this whole space is really fascinating to me because I think I've said to you before, I think podcasting, to put it really simply, I think the reason why podcasting hasn't taken off is because that word, like, what's a podcast? Like, I don't,
Right.
like, my mom doesn't know what a podcast is, but she likes certain shows on the radio.
Right. Right.
And
Well,
so podcasting has a brand problem.
I do think podcasting has a brand problem, no question, because I think what Joe Rogan does and what, gosh, well, I don't like, I want to recognize her name because I do think she's a very visionary content creator. Alex Cooper, who's Call Her Daddy, and then Travis Kelsey and his brother. I think these folks are, I mean, it's not necessarily like Good Morning America, but it's that sort of show. They're hosting sort of that town square television, if you will. It's just not television. And that gets back to content and how it's morphed. And I think interestingly enough, just to loop back on something that you said, I looked it up and Spotify launched their first product in 2010.
Wow.
They formed in 2006, but they launched. It's surprising enough, I didn't realize this. They launched first in the UK. So they've had a bunch of different twists and turns. But to your point about this, like your mom doesn't know what a podcast is, but she watches shows. I mean, like my wife watches Good Morning America. Sometimes she watches whatever Kelly Clarkson show I see on sometimes, things like that. And the only difference in those is the channel that they're distributed
Right.
in. These deals, the Joe Rogan, the Alex Cooper, the Travis Kelsey, they're controlling their own distribution. I have no idea if that's more or less profitable for them. It's just a different model, quite frankly.
Well, I mean, look, when you see big numbers like this, though, particularly in the podcasting category, which I think is not as big as radio and all those other things, but when you see $250 million on a deal like this, I think it speaks to the fact that there are a lot of dollars still available to be spent on brand marketing,
Sure.
maybe even performance marketing. I mean, however depending on what they sell, in terms of the ad inventory. But the point is, though, is that like, we talked about iOS 14 and the shift on paid marketing or pay per click marketing, that started 3-4 years ago now. Those dollars continue to have to be spent somewhere, so I don't know. I guess what I'm just saying is that like, I don't think it's accidental that podcasting dollars are rising like this. Like, I imagine if we were to plot out the, annual advertising spend on the podcast category on the whole, I bet it's been up and to the right for the last couple of years, but it's probably gotten steeper. That curve has gotten steeper and steeper over the last 3 to 4 years as it became harder to deploy money in other, channels. So, I don't know. Maybe I'm just super bullish on podcasting, I suppose. But
Well,
yeah.
more importantly,
Anyway,
it's you talked about the money that's out there to be spent, and I think that's the thing. It's like you're not necessarily even really talking about podcasting per se. And I think good examples are, you mentioned SeatGeek and Travis Kelsey. I mean, like easy to see the crossover there. Sports fans talking about how to get seats to the next game. I think when you think about those deals and how they're structured, you do cut through a lot of the red tape. I've had some paid sponsors on my travel podcast, Miles to Go, and, I mean, they're very organic conversations. Do I believe in the brand? Do I wanna talk meaningfully about the brand? Is it something that I wanna use? Is it something I think my listeners would use? And then we go, and we're out to market with it, and it can be very quick and very topical. And I think that's, I mean, like, I don't listen to the SeatGeek ads on Travis Kelce's show, but I mean, like, obviously they could change that read for last week it was about the NFC Championship game, and next week it's gonna be about the Super Bowl, and that could pivot very quickly for just in time marketing.
You know, I don't mean to put you on the spot, but, I know we're gonna record an episode while we're in Sioux Falls in 2 weeks.
Yeah,
It might be interesting to actually have Matt Paulson join us for that. Matt from Sioux Falls, because I'm curious how he would talk about this. Mostly because when you look at some of his content that he's been putting out there,
right.
a lot of it has to do with the fact that so he is not secretive about how he makes money for his company, MarketBeat.
Sure.
But one of his as you were talking, one of his most recent social media posts came to mind where he basically said he doesn't do any brand marketing. So MarketBeat does like tens of millions of dollars a year. He's a bootstrapped company, team of
Mhm.
13 in Sioux Falls. And so in this post, he said something to the effect of, we don't do any brand marketing. It's all affiliate. Everything's affiliate. I think it'd be interesting to just kind of maybe we'll regret saying this.
W
Who knows? I think he listens to the podcast. So but anyway, Matt, here we
well,
go.
here's how we'll know he listens to the podcast. I will reemphasize
There you
that
go.
there will be no quiche in South Dakota before there are donuts. So just to lay the
He might
groundwork for
fight
that.
you. But the thing is, I'd be curious how he would monetize this. So, like, for example, when you just talked about, like, monetizing a podcast, is a sponsor somebody you would use and all that stuff. I'd be curious, if Matt's not an agent, right? But let's just say Matt was representing you in that hypothetical scenario. I wonder how Matt would think about that, like, I wonder if the dollars are wildly different for, brand marketing versus affiliate. And I know they are, but anyway, it might be a fun kind of conversation of what the dollars look like.
Yeah, and I think, I mean, for what it's worth, I do think there are shows that work better with certain types of marketing.
Yeah, that's
I
fair.
mean,
Yeah.
it's like take SeatGeek as an example. I mean, and I know you're not like the biggest sports fan in the world, but
Why you gotta do
if
me dirty like that, man?
don't make me tell the hockey story. Just don't make me tell the hockey story.
Oh, yeah, I can't live that down.
No, you really can't. So, I mean, like once the Super Bowl happens in, call it 10 days or, less than that when this episode drops, it'll be a handful of days after this episode drops. There's sort of a lull in the sports calendar. Basketball playoffs don't start until, call it June. Baseball season's kind of sort of getting ramped up, pitchers and catchers, things like that. But SeatGeek doesn't have a whole lot to sell in terms of inventory. They don't have football. They've got hockey and basketball, which, are something. But I mean, the NFL drives a ton just in terms of their ratings. They're the biggest. Baseball, I mean, yeah, I mean, baseball's got interest, but I mean, it's a 162 game season. So, I mean, it's spread over a long period of time. So, if they're advertising on Travis Kelce's podcast this week, next week, whatever, that's really going to be more awareness marketing because it's unlikely somebody's gonna be like, oh, I got to get my tickets for that baseball game 7 weeks from now. Let me click right now. And so
Yeah.
I do think there's crossover there. Whereas, like, I don't know. I'm trying not to make this a political comment. I don't listen to Joe Rogan's show. I've heard some of his views and just decided it's not something I want to tune into. But I do listen to a wide variety of podcasts, and I have listened to Alex Cooper's Call Her Daddy, and I think it's interesting in that it's a show centered around female sexuality, but they do a really good job from an advertiser standpoint of finding things that their audience also engages with, whether it's coupons, like they had a handful of like the coupon extension sort of sites were sponsors from them of her show for a long time. And I think that those are things that Spotify saw. I think what Spotify saw in, I mean, if you think about like when we've been, abroad as a tech company, I mean, there are certain things that most investors won't touch. And generally speaking, sex is one of them. I mean, if you think about, this goes back, 3 or 4 years ago when there was a bunch of like sex ed tech on the floor of CES. And then remember they gave an award to a woman who had put out a toy that was for female pleasure. And then they revoked the award before the show. And it was this huge,
I forgot about
like,
that. Yeah, yeah,
it was
yeah, I
a
remember that.
big controversy. It was like this
Yep.
big, like, "Oh my gosh, we don't wanna talk about that." And so, Spotify, like, leaned heavily into this by investing heavy into the Call Her Daddy show, and I think because they saw that as an area of growth for advertising dollars platform. At the end of the day, I don't remember what Alex Cooper's numbers are like, but I mean, they're big, and so if even if you say they're half or a third of what Joe Rogan's pulling in, to your point, what you mentioned earlier, they believe they can make money on these deals, or that
Yes,
whatever the losses are on the deal, it brings them enough awareness. So they're not gonna lose a $250 million on Joe Rogan. Maybe some of it's a quote unquote investment in marketing, but it's not a $250 million of investment.
exactly.
There are
Yes.
some returns.
Look, that's exactly right. I mean, the thing is when you own the entire ad inventory on those shows, your worst case scenario is that the remnant ad slots are used for your own brand. So in other words,
Right.
you know, I'm sure that when they like model out all of the available ad slots and stuff like that for Joe Rogan and anybody else that they're with, the best slots are going to be reserved for probably their own brand, for
Right.
Spotify to talk about it, and then everything else is for sale.
Right. Right. And by the way, I
S-
looked up the numbers. So we had Joe Rogan's old deal in 2020 was 100 million. Alex Cooper's deal in 21 was for 60 million. And so her deal will come up soon because it was a 3-year deal. So I'll be interested to see what the numbers are on that deal when it comes up. I still think, like, when we talk about, I used this comment right before we hit the recording button about the barbell, like, the vast majority of money spent in this world is spent on a very small handful of shows, very
yes.
small. And then
Well, yeah.
the scraps for everybody else are like, I went and looked at the YouTube monetization stats. So if you get to whatever the numbers are, 1,000 subscribers and 4,000 hours of content listened in the past, whatever, you're essentially making like 5 or $10 per 1,000 viewers of your show.
Hmm.
Not a lot of money.
Yeah.
So the
Yeah.
money is in these very, very large deals that are incredibly popular magnets. Joe Rogan, Alex Cooper, Travis Kelsey.
Well, I mean, is that surprising? I mean, we've talked about the
No.
idea that the world is actually driven by the power law, not
Hmm.
normal distribution. So your choice, and this is probably true as a podcaster, as a entrepreneur, like like what I'm about to say, I think applies to every part of your professional career. Is that you either need to go wide or you need to go ultra narrow and deep. Anything in between those two is not worth a whole lot. In other words, Joe Rogan, you said yourself, you don't listen to him. I don't
Right.
either, right?
Right.
Now we're only
Right.
two guys, but the reality is enough of a valuable audience to a particular advertiser like Spotify exist.
Right.
Even with Call Her Daddy, like, I haven't listened to the show, but, based on how you described it, like, and I'm making this up, but, like, that audience is probably worth nothing to that vast majority of advertisers, but it's worth a lot of money to anybody that wants to reach the specific demographic that she has. I mean, that's not rocket science, you know that, right?
For
But,
sure, yeah,
uh
yeah, but I think on that vein, when you talk about this power law, it's also interesting to me at the same time that we're talking about the power law, that we're talking about a company as big as Spotify coming to this realization and pivoting out of this walled garden model, and that they're now
oh,
saying, "Alright, we need to be more of a distribution house, not a destination," if you will.
Uh, and that's my point, is like, this is a huge step in that direction. Like, it's
Right.
that's the important bit. Because the other side of this, by the way, is that, their market cap today, at the time we're recording this, their market cap right now is about $43 billion. So,
That's
in the
it.
grand scheme of things, 250 mil that's spread out over a couple of years is probably a dent for them. But the point still remains that the bigger thing here is the not so subtle shift to becoming a media company.
Right.
And I think we're going to see more of this, because the reality is that, like, consumer behavior change is really hard,
Mhm.
and this walled garden strategy, it's really hard. That is like a really hard thing to do,
Yeah.
especially as the competition rises. So,
Yeah.
um, anyway, I just find this thing so interesting. Like, this whole podcasting category is just so fascinating to me. The barriers are lower to get in. I don't need a radio studio. You don't need a radio studio, but
Just
on
need
the
a
flip
bunch of gear
side,
right back there.
yeah, Yeah, you've got a bunch of expensive paperweights that you haven't used yet, but
I'm using a couple of them. You can see a little light up there, but yeah, I'm not using the very expensive paperweight. Thank you to Charlie for recommending the Sony FX30 that needs to get hooked up so you guys can see a better, like, anybody needs to see a better quality image of me, but they
I
will.
there's something ironic of having an amazing camera sitting there ready to be used that you showed me through a less than stellar camera that whatever you
It's true
have right
story.
now.
It's a true story, and I can't take a
It's
picture of the camera I am using, but it's a Logitech $70 webcam, and it's fine, but it has its limitations. It
I
does.
love it. I love it. All right, so, man, one constant in our lives is that we pick so many, things to talk about on every episode. Today, we were like, "Oh, we can talk about 4 things," and we haven't even gotten through the first one yet.
No, we haven't, and there were a bunch of really good things to talk about. The other thing that we talked about that we wanted to try and touch on today is sort of Facebook's reaction to Apple's new rules overseas. And we talked last week, Apple essentially, they opened up the path for alternative app stores, if you will, and there were a set of restrictions on what it would take to be able to qualify. And Mark Zuckerberg, on a day where the only thing about these comments that surprised me is on a day where I think they're supposed to be doing their own sort of like humble brag because they've declared their first dividend and the stock price is going up and all this stuff, he's calling out Apple, and he's calling out Apple for saying that essentially that the new rules are so onerous that he doesn't think any developer will opt into them. And it's like, all right, I mean, I understand Facebook has a paid model, and so there's friction there between Facebook and Apple. I'm getting ahead of myself and not letting you go first, but I these comments struck me as a little bit cheeky because I think they're also in front of Congress testifying right now about Instagram and teenagers and warping people's minds while he's like crapping on Apple's doorstep.
Well, you and I talked about this, I think 2 or 3 weeks ago on the podcast, and, I was a little cynical when that Apple announcement came out, and, I'm like, "Who's gonna pay for this? Why would somebody put $1,000,000 up to start another app store or whatever?" And you made some really good points, but, since then, one of the things I came to realize is that, like, Apple, if you take the optimistic view here, Apple just wants to protect the end user from, new stores that are just only going to be around for a little while. So, but the next thing there is like maybe this whole model was not designed for individuals like you and I. It was actually maybe designed for larger companies to step in. So for example, anyway, this is just like all like creative navel gazing here, but I started to think like when you think about like, do you know who Axel Springer is?
I don't.
Okay, so Axel Springer is is a company based out of, I believe, Berlin. I used to go spend
Mhm.
some time there when I was active at 500. So Axel Springer owns a lot of media brands, and I
Okay.
can't think of any right now, but they own like newspapers here in the U.S. and all across the EU and stuff like that. And maybe this is a bad example, but it's the only one I can come up with in the moment. But it's like I can't see somebody like you and I forking over, a line of credit or anything like that. Like the idea of setting up a two-way marketplace, trying to woo more developers, that is not something I think that an individual takes on. But I could absolutely see companies or brands like Axel Springer or other corporations actually set up their own app stores. I mean, look, we talked about something in a similar vein the other day where we said, newspapers are being held up, or no, it was the New York Times. The New York Times reported that like its games division is what's really holding it up.
Right.
So if there was a New York Times in the EU and games were really where it was at, is it conceivable that they might be interested in setting up their own shop or whatever the right term is, and then distributing their own games exclusively in there? I'm making this up. It's total conjecture, but back to what you said about, the topic here, like, yeah, it's kind of weird that, Zuckerberg took a minute to say something about this, when he's got a lot of other things going on. That's kind of weird.
Glass
But
houses.
yeah, glass houses, yeah. But I think the more interesting sort of angle here is just that like further thinking about what this means for the EU. Now, I think it's more likely. I mean, you and I talked about this. Like, it's more likely that that model may follow over here eventually. I don't see the
Yeah,
EU
something
locking.
like it. Yeah, something that rhymes with it.
Yeah, and either way, it could be brands that do it. So, well, I don't know. it's evolving. Let's just see how it kind of works out. But here's the thing: doesn't we talk? Oh yeah, we did talk about this like a week or two ago. But like something like this, the pressure's already there. Like you brought up a
Yeah.
couple examples last month or last week when we talked about this. That there are a bunch of apps that I use every day that I didn't even realize that I can't download from the Apple App Store.
And
What?
by the way, like, I think we never really put this bow on it, but I think if you think about that discussion last week, neither one of us was really that affected by the fact that we couldn't download those from the App Store.
Yeah,
We still found a way to get all that stuff without a problem. It wasn't a big deal.
that's right. That's right.
It really is, it's really just the mobile device. It's much more firmly gated than the laptops that causes that sort of issue and stickiness.
And that may be more related to, like, economic I mean, you and I walk around with, like, MacBook Pros, but that may not be something that other, countries, b given the exchange rate, can afford, and maybe it's an iPhone that is the primary device they're using, so, yeah, anyway, it'll be interesting to see how that plays out because it's probably a harbinger of what's to come here eventually.
Yeah, and I don't know the numbers off the top of my head. I was trying to Google it real quick, but laptops are obviously a very small part of what Apple does in terms of number of units off the shelf, and I think the world is driven much more by smartphones than by laptops. But I think it's
Yes.
also I think it's a sign that there is this tension, if you will, between brands and distribution, and that you right now there are, I don't necessarily say that few is the right word, but maybe that the distribution side of the business is underserved. And this goes back to the joke that you made last week about Circuit City was our distribution model back in the day.
Yeah.
Crazy Eddie, if you're my age. And now it's, the distribution pipes are very different. But they're also still fairly limited because most people do distribute through those app stores. It's become much more centralized, and now we're starting to see a slow move back to some level of decentralization. Maybe not quite the, you go visit each random website for the product you want to buy and download it, but that there is some level of decentralization. And whether that's because companies like it more or it's because they're trying to find a way to put pressure on Apple to change their model, I would believe it's the latter, but I'm not sure. I think
Yeah.
ultimately, I think companies would be fine and would actually probably prefer having one single distribution point, but they
Right.
can't fade the 20 or 30% rake that Apple wants to charge.
Right. Right.
It's a business model
Right.
breaker, especially when we're talking about in what's been something of a recessionary environment for the past couple of years. Most of the companies that we have investments in that are license based or seat based sort of things have seen those numbers shrink as employees have gotten laid off. They need less Slack and Microsoft and Zoom licenses because they have less employees.
Interesting. Yeah. Huh. Well, actually, this could go long if we talk about that. That's an we should probably talk about that like at length at
Eh,
some point because it kind of brings up.
We should, but yeah, we're gonna go long today. But yeah,
I was gonna say I'm gonna hit the wall in time here a little bit, so
you are, yeah.
it's hard for me to hold back.
I know it is. I know it is. We'll hold back and we'll put a pin in. We'll talk about that in terms of seat license shrink and all the other stuff that goes along with it when we strap these microphones on again in a few days.
I love it. Well, are you traveling between now and Sioux Falls at all? Or are you homebound?
I am. I am. If you'll remember, this is my emergency Disney trip, as one does.
I think you just call them emergency Disney trips to justify it. Or
I
maybe
actually,
you're trying to not make me feel bad. I don't know.
I think I torment you. I feel like if I call it that, you'll roll your eyes, and then when you shut the camera off, you're like, "Damn it, I'm not going to Disney." Like,
Yeah. Well, I think the only thing I can say back to you is I've helped you double your email collection rate in the last couple days, which isn't saying much because there's
that
some
was
room to
pretty
go
pathetic
still.
before, yeah.
That's the only thing I can get you back on. So enjoy your emergency Disney trip while I fix your email capture rate.
Yeah. Somebody's got to do it, and you are just the man to do it.
I guess.
Yep. So one more episode in the land of Virginia before we record in South Dakota. And if you are listening and you are planning to be in South Dakota and you have some video skills, we could really use somebody to do a video version of the podcast so that you don't have to just listen to Paul and I that week. So all that and a whole lot more when we get strapped into the looking to be like not too brutally cold weather in South Dakota.
Anything can change. Anything can happen in the next 2 weeks. We'll see.
Come on, man. Don't jinx us. Don't jinx us.
All right, buddy. Well, I got to run to another call here, but I am looking forward to seeing you next week, and hopefully I'll have that email fixed a little further for you as well. So it'll be fun.
I'll be the guy in the window seat tapping you on the shoulder whenever I need to get up to use the restroom.
All right, let's leave it there.
Take it easy.
All right, buddy. See ya.